we're rolling the coupons into the higher bill rate because people will only want our bills as collateral. They don't want the UK 30 years, which are rising. They don't want the Japanese 30 years as growth slows and wages go up. They're a mess. Their 30 years are going to like all-time highs. So look at this. Interest rates are at a very unique position relative to last time was 2007. In 2007, our debt to GDP, I know I flashed a new grid at you, was only 60%. The last time we had this type of interest expense, we had less than half of the debt to GDP. We are encumbered and we can't afford a 4.5%. That's why rates are going to go lower. And that's also why I believe people are looking at something like gold. They're looking at Bitcoin. They're looking at assets that won't debase when we continue to blow through the debt ceiling like we did in I think eight hours, maybe 4 hours, Bill, when we spoke last early this week. We went up $389 billion the minute the debt ceiling broke. So
Which, my immediate reaction also was, well, did that actually happen? Um, or was that a artifact of bad data?
no, it did happen. That no, it then it
But it
sustained for
happened
the
a while ago, right? Like,
July 7th. Oh,
but
I see
yeah,
what you're
yeah,
saying. I see what you're saying.
the debt was
Um,
incurred
well, it
presumably, or maybe they borrowed. You know,
yes. So you're saying I said no to you a few days ago, but you're right because what happens is now the Treasury won't put off all the payments to the pension funds it has, like it started to do in 2023 in the last debt ceiling. They just stopped paying the pension, and they give IOUs, and then now when the debt ceiling's gone, Bill, they say, okay, I'll backfill the IOUs with debt now. So yes, it was spent. They just
okay,
have
yeah,
to, yeah, it's all just ridiculously silly.
it's accounting.
If you want to follow the money, right? I mean, we've seen it, we've heard it. Back to Nixon. Um, so market cap breakdown. I like this. And Jennifer, when I was at 3IQ, I was new to the space, head of research, came in.
With Ethereum going up is really the best hope for other tokens because I think managers, when Ethereum rises, sort of everyone, institutions and retail get more interested and start to cascade, to the ecosystem and then beyond that to other tokens. So I think the it's important to be invested beyond a Bitcoin and the majors, but nothing's promised. We don't get to get new all-time highs in Ethereum just because we've gotten them in Bitcoin, for example.
But that's why people come to you and other players, professionals. Well, especially with your background, is because they can get Bitcoin and ETF. They can get it
Bitcoin is mainstream now, but it's early mainstream. So there's still a long way to go. And the total addressable market is so large.
Okay,
I
say it. Come on, let's put a number on it, Jennifer.
don't know, 100 trillion, or I don't know. It's the
Yeah,
global
that's,
financial markets. Yeah. Yeah. So it's big.
I agree. I'm going to show one more slide and then we're going to back up into your story. Exactly. I want to know how. Dubai-based derivatives firm, Deribit.
Yeah. Yep.
And also, I don't know how related it would be, but the Ninja Trader billion-dollar acquisition by Kraken was perhaps a foray from a crypto native business into TradFi as well. And I think that when you do that type of an acquisition, you also get access to the futures merchants and whatever else, like the regulatory stuff that you need to look at.
I think the biggest point Jennifer just brought up is that you're buying equities. When we
Buster, he sees people or dogs in particular, and I'll try and mute him. Anyway, so there wasn't a lot in the factor space, and Mark asked about macro, and like the word on the street from this is offline conversations are that some of the macro quants are being jettisoned or shut down. So at the multi-manager, multi-strat hedge funds, basically you have an agreement that if you persistently lose money for a certain period of time, they and everything that's happened. And so that kind of gets back to that tariff tantrum. Thank you for the phrase, Jennifer. It's always important to have those types of phrases coined. Um, I mean, I'm being serious, because then you remember them, and years later you're like, oh yeah, that's when Bitcoin went to, what was it, at 70 or something, and like, congratulations on your recent really good trade. Um, which I there again, I got freaked out, and I was complaining to Mark and doing my usual like non-quant thing, getting emotional. And then yeah, I just thought I'd also share the latest from, I think, yeah. So this is, Wolf put out a note about Bitcoin, record high of 123. And then it's interesting. Yeah. And then I guess basically what I just talked about. And you can see some of these moves are big, but I doubt that they're statistically significant. And then in the factor space, um, size, so I think that's just Bitcoin and Ethereum, liquidity and low vol have done well, while momentum is not. And perhaps that is like the altcoins. I'm not sure, but that's where it's kind of fun to dig in after you finally look and share it on a live podcast. So um, we more to come in the research space from Mark's Substack in particular.
Yeah, I think momentum is often where altcoins have shined, and many crypto managers favor momentum strategies because they've done well. They've done well in the past. I think it's interesting this year, as seems in crypto markets, maybe in all markets, Mark, you would know better than me. Macro has dominated so much, and then for the people who had tremendous tech and crypto technical chops who could look through all these new projects and really pick out the big winners. That hasn't been as much of a factor this year at all.
I also forgot the kind of punchline with the shutting down some of the quant strategies at the multi-manager, multi-strats, also meant that the discretionary macro traders were doing a lot better. They can digest the news and put trades on that monetize their ideas, and quants can't, because from a systematic perspective, you'd have to go back to the last tariffs and hope that the world behaves the same way, and then your model actually has to allow you to do that. And pivoting strategy based on macro news, it takes a while at the least. And then when you said some places are they like the momentum trade, like, so do I, but I need the crystal ball that gives me the reversal factor, and I know when to get out. Um, and then, so just to make sure we do ask our question from the live chat, which again, apologies, I can see we're flickering in and out. What's the best way to raise capital? And, this might be a good one for you, Jennifer.
The best way to raise capital in crypto markets, Bill? Is that
That was my follow-up question. So yeah, like maybe start there, and then given what I've been up to, I can opine a little bit as well.
the best way to raise capital is to fit in a bucket. So that's why I think venture funds have been very successful. Private equity was so successful. Now private credit is there's now a bucket's created for private credit. So now
be careful, folks.
to each other, and I was like, I'm interested in capital raising. And he was like, I need to raise capital, and so we even just like talk shop a little bit, and I think I'll introduce him to someone now, and vice versa. Like I think even recently, talking to people, like potential guests on this podcast, you run into ideas and things. So that's a long-winded way of saying I think that you probably need to keep at it. You have to be okay with people saying no, and you have to spin everything into a positive. So if someone didn't give you money, it's because they were the
It was nice to be a kid then. But we dove way into markets. I could, as Bill knows, he just, if he could reach through the screen, he would slap me. It's like, enough. Let's go back. We have Jennifer on. I'd like you to go and tell us a little bit about Runa, how you got there, and as you know, my favorite author that you like, a little bit about Miss Perez, please.
Yeah, I spent virtually my whole career in asset management. When I started as a young pup, I was raised from a pup by Bill Miller, the legendary equity investor who hired me right out of college as a very junior analyst. And um, that changed. Could use this to take out a lot of costs, which we needed to do because asset management is no longer a high growth business. It's a mature, get your costs out, consolidating business. So we were doing that, and at the same time, I'm reading the Bitcoin Standard and taking classes in Bitcoin, and I thought this is the most important thing happening in financial services. And what am I doing? You know, this is a new asset class, and I'm right here. And I couldn't believe the opportunity to get in on the ground floor of a new asset class. So I left my role to start Runa Digital Assets with my partner Max Williams. I know
Yeah.
pretty well. So I think that skill of not being afraid to be wrong and being willing to think about how big could this be, you know, and then placing probabilities on it. So he would do probability weighted valuations and use that as a guide. And that's what I think, that probability of could Amazon be this sort of global platform for everything, started out as a small probability, but a really big number, and then that probability grew over time. So I think that's well accepted now. But Mark, I know you're with me in remembering the Amazon.bomb cover of Business Week.
Um, Only pick a few eggs and put them in your basket and watch that basket, as you said, very well, and reassess your assumptions. And we won't touch on it now, but the diversification benefit that people talked about, I think people should revisit that versus what their actual costs are in life, and does an 8 or 9% return pay for your life or preserve your buying power over time. So Jennifer, back to you on the Bill Miller. With him, you learned the investment side. He figured out the network versus the cash flow, or network and cash flow, not instead of.
characteristics of the end of one age and the beginning of another. And I agree. I think the the artificial intelligence and crypto together are part of that new technological age. I think artificial intelligence is much bigger and more important and more dominant in reshaping everything. But I think crypto has a critical role. They make phase changes. And that's, I think, what we're seeing right now, and why many traditional investors are very perplexed by by crypto, by artificial intelligence, and how to incorporate that in what they're doing.
So I didn't get to chime in. My son was getting off the bus when you guys talked about 0 to 1. A lot of corp dev types of people and people that used to work at fancy consulting firms say that kind of thing. But I will say, the horse-drawn plow was one of the most disruptive. I don't think that's exactly what you said, which reminds me of LeVar Burton would always say reading is fundamental on the Reading Rainbow. If anyone remembers
We
that
bring
show.
cultural memes back to life on this show too, Jennifer. We hear it's good for our viewers. We're trying to.
And that's all I have to add.
But when I talk to people who are earlier in their careers and they ask me for advice or what would you do if you were me, and I sort of point out to them, I think the average person in America reads, I think, 4 books. But even when you talk to people, even that sounds like it might be high. I'm not sure, but it's certainly
Yeah.
not. It's not a big number. Whereas most CEOs who are interviewed, most CEOs that you probably have met and know, read more like 50 books a year. I tend to average between 20 and 30 a year. And in any given year, that doesn't necessarily make a big difference. But if you compound that over 10 years, and I'm reading, 250 books to, 50 to the person I'm competing with.
Or
Yeah.
Jennifer, 4.
Yeah,
I
yeah.
think 4 meaning period. That's kind of a birth to death thing. Unfortunately, that might be the case
Yeah, I
as
interviewed
well.
a candidate who was interested in an analyst position with us and asked them about, what they were reading. And the last book, they had to look back to the last book they read, which was in 2023.
So I also have another admission. I have not read this cover to cover, but that is the name of our podcast. And this book was written, I think Mark probably knows, 1926 or
No, Bill,
thereabouts.
1925, 100 years ago,
Yeah, cool.
by a Spaniard, and like Miss Perez and the guy who helped Orange Pill, Bill Miller, in 2013 at the Allen Company, which
Yeah,
Digital
what's-
Gold highlights.
Yep.
And Bill, this book, we got this title for our podcast. We found out later, it's the same stuff that's happening now. If you look at the populism, if you look at the disruption, there was post-war, there was debt, there was a redefining, there was a disaffected middle class. Yeah, so that's the one that we first did, and then back to reading, we're like, wait a minute, this has happened, but like
Yes.
he lays
But
it out.
and I would also, just to plug it, highly recommend that anyone who is entering, the Wall Street world should read that. When it's written by journalists, I think it's written in a easier to understand language. Like, I remember reading Barbarians at the Gate summer after sophomore year. I decided I wanted to go to undergraduate business school, and I was like, okay, I have to learn about Wall Street. And you read that, you read Liar's Poker, and some of those other very well-known books, and you do learn quite a bit about the business.
Yep.
That was one of the things Bill would tell young analysts if they're following the insurance industry. They need there are iconic books about the history of insurance and the insurance business that they need to read. And not only for their own education but for credibility when talking. You can be sure the CEOs of insurance companies have read those books. They have that context.
So what's your favorite book recently? Actually, let's stop back. Let's go back to good behavior. About what's your sort of go-to when you have time to reassess? How do you take in the market? Do you look at client incomings? How do you manage the business? And what do you suggest like good work behaviors are for people in this age of insufferably amount of information coming at you?
Yeah, well, it is hard not to troll around a lot. X is a very rich environment for crypto information. I don't know if it's possible to invest in crypto without being on X. Also, great research, the firms that are dedicated to crypto, news firms like Blockworks and The Block, and they have newsletters. They send out a lot of newsletters. CoinDesk, we write for CoinDesk. CoinDesk puts out a lot of great content.
Yep.
So certainly places like that. But Max and I start each morning at 9 a.m., which gives us a little time to look at markets and do some work before we meet. But we meet every day at 9 a.m. to talk about the day, what we're doing that day, and what we're seeing in markets and what we should do about it, if anything, or what we're monitoring. And then we have more periodic weekly discussions about the portfolio, reviewing it in more quantitative terms and qualitative terms. We have dashboards that we review every 2 weeks about market trends, trying to assess where are we in this bull and bear market cycle, and other things in the macro environment. So we have a sort of cadence of things that we do to kind of bring us back to earth, make sure we're touching the data that we agreed, years ago is important for us to stay attached to. But Mark, I think like any creative enterprise, there also has to be time to roam around. Some of the best work that our previous analysts have done, and we just hired a new analyst. He's starting in a couple of weeks. But we've given them a lot of latitude to go look for, to go use crypto assets, play games, to to read, to take classes, and to really follow their own interests to find opportunities for us. And that's been their biggest value add. So we like to leave time for sort of, I don't know, what do you call that? Free range time,
Yes. Yeah.
because
And
it's a creative business.
it is. And the one thing you said earlier, which I loved, was where are we? And I think, given your experience, you are, there's the word wisdom, I'm going to say it, and you know what to do with a piece of information maybe better than others, but versus the sub paper is right now.
Yeah.
Where are we right now in the market? Where's my market? Where's the rate market? So that when there's a news event, you know where you are, you expect a behavior. If it doesn't happen, you either have an opportunity or you have information. So that was number one on Wall Street, drilled into me since first going on the desk in '86 on the corporate bond desk at Solly, was have an opinion or go home. And it better be informed.
Well, that reminds me of a great recent example in one of the hottest tokens in crypto, which is Hyperliquid. Hype is the symbol, HYPE, and Hyperliquid is a perpetuals platform, an arguably decentralized. I don't know. There's some controversy about that. Decentralized, perps platform, and perps are this great innovation in crypto that are coming to TradFi now. But anyway, Hype had something bad happened on the platform. Someone exploited the platform, and the token went from 16 to 13 or so, and eventually to the high tens. And I don't know much about it, but Max and our analysts knew a lot about it. And so in talking to them as it was, dropping and everyone was selling it, it sort of looked not that cheap as a perpetuals platform. But our analysts said, I think I'm reading, some people think that Hype's in the running to be the everything platform, that it may be in the running against firms like Coinbase to be an everything financial services platform, but decentralized, a crypto-based platform. And I hadn't heard that before. So that's what gave me the conviction and Max to add it to the fund, in which we did. And that was the big idea that I needed to attach to, not just its current business, but what might it be, as a platform business, what could it be worth? And I think the token, we sold it in the listening to different things and reading different things than I am. They're bringing in important ideas.
There's one person we spoke with. We talked about her before jumping on, and she's brought up the term of information asymmetry and how much there is in the digital asset space versus, and it's publicly available. It's just there's an asymmetry. People aren't digging for it, or they're not spending the time, or they're not putting that on chain versus the off chain information together to get the value add.
Yes, and it's like, I think this is like what the equity business was like in the 70s and the 80s, where you could have an information advantage. Bill used to send me out to the Midwest to visit Baldwin Piano and, companies like that no analyst had visited them in 10 years, and you could get additional, insight and information by doing that. Today with Reg FD and all, you really can't,
Yeah.
you don't. And there's so much available online. But I think it is true in crypto. There's still that opportunity in crypto where it's so dispersed, it's so unorganized. And I know we wanted to talk about AI tools, but Max and I are struggling finding AI tools that navigate that information very well. So
I
that's
know a
an
guy.
opportunity, but
I
it's
know.
yeah.
I know a guy.
So yeah, I think that is still a big opportunity in crypto.
I've actually I confirmed some of what you just said pretty early on too. I was like, what I do is I look for statistically significant changes in prices, and like that happens. It's actually big moves are obviously a lot more common in crypto, but I'd be like, what, something's up 20%? All right, where's the news? Nothing. You go like everywhere, nothing. And you, like you said, X. Okay, that's like the source of truth, and then you find find some crazy Twitter handle from some you know
Standard. It's a great, like, very granular review of all that stuff. If you read the Bitcoin Standard, you will understand how Bitcoin works. Some people care less about that, and they are like, I just don't get it. Like, why does anyone need Bitcoin? It's not backed by anything. It's not a thing. And I just don't understand why anyone owns it. Those people, I recommend Broken Money by Lynn Alden, who's a macroeconomist. But really, Bitcoin, to understand Bitcoin as a, like, why does anyone own it or care, is really about the history of money. And if you read her book, and when she sort of lays out the history of how technology has influenced money over time, it, like, makes perfect sense. Of course, points. Um, and they have their own blockchain, as you know, Base. And so they're sort of doing all the right things to stay in front of products and services that people are going to want. So I have a lot of confidence in Coinbase.
And have you run across people in finance usually just want to set it and forget it? You know, the ETF or the bank. Have you run across people saying it's a bearer asset and maybe you should do a multi-sig somewhere with another bank or something else? And is that so involved that you don't even bother with it?
Yeah, I think, Mark, operationally, as a former chief operating officer, one thing I learned was, complexity is to be avoided at all costs. Solution, and so does Coinbase. So there are multiple ways that you can custody on Coinbase, including remote cold storage, not attached to the internet, in mountains, around the world, that kind of thing. So,
Yeah.
so they
Well,
have both.
for your firm, you have to be involved in
Yes.
derivatives. You have to be swapping out. But as an individual, Bill, was that an institutional or a retail question, you think, on how to hold Bitcoin?
I suspect that it was more from a retail, like they literally like just realized that they want to buy like Bitcoin, and you know they should read the paper and understand what they're doing. But yeah, I think there is a contingent out there that maybe they've been um just following the news and developed enough understanding that they want it, and so I do suspect it's a retail type of question.
Good.
Yeah, I think for modest investments, again, not financial advice, but I think, investing with someone like Coinbase or others, and allowing that exchange to hold your assets without having a separate wallet or all, I think it's fine. I think as the numbers start to get bigger, and then you might start to consider
Yeah,
other
that's a
solutions.
great point. Just get involved, and and then my opinion recently, because I'm actually doing this. I own the ETFs because I
Mhm.
have retirement accounts, and I also own the coin, and there are options whether you want to put it as collateral now, um, and move it around. So just get curious after you read the background, like from Saifedean's Bitcoin standard, like Jennifer said, or digital gold, which I think Bill mentioned. That's my favorite because it was 10 years ago and it tells you everything. It's like and the guy Popper is just saying, who are these wacko cypherpunks, kind of, and he tries to treat them, and it's a distant curiosity is how he writes it, I think. And then he says, well, we'll see. So 10 years later,
I think that's really a tribute to their just being long-term investors, but they don't have a lot of questions beyond. They like to sort of learn through what we write, and sometimes we'll get responses to that, like little comments or here's a piece I saw that you might be interested in. But they're as likely to send us something as they are, they're more likely to send us a piece that they saw than they are to call.
The opportunities that it was still hard to beat Bitcoin at times, but it had a different return profile. It made us smarter. And what it does is it keeps you ready, as you said, for the next cycle. It informs you. I loved those meetings that we did with the team. They were wonderful because you really saw everything. And like what you said with Max and you and your analysts all coming at it from potentially different generational and different backgrounds, you're going across that system. And it gives you, I won't say confidence, but you're a bit fortified to handle what is definitely going to be more waves of volatility.
Yep, that's right.
Mark, I think you have a train to catch.
Okay, yes, you're right.
And I just coincidentally, I saw that since we've been talking, I got an email from Zapier, which, we can get in. I think we could talk forever with you, Jennifer, and unfortunately, Mark does have a train to catch. But this, I guess LeVar Burton is now on the AI circuit. And so I'm sharing this email that I just happened to get in the last 20 minutes.
This is it. This is why you got to canvas far and wide, like Jennifer said. You never know what's going to come in.
That's right.
Yeah. So maybe we'll even get LeVar Burton on.
And a nod to the 70s with Roots. I mean, folks, it all goes back to the 70s. Read the books. The Bronx is Burning, one of my best.
So yeah, with that in mind, and we're gonna wrap soon. Jennifer, where can people find you? What do they need to do to I guess read your research, or maybe even find you for investment reasons? Feel free to plug away.
Yeah, thanks. People can find us at runadigitalassets.com. We have a little form that people can fill out to get on our mailing list, or